Yeah. So basically, again, it just goes to what I call the expense ratio, or and that's why it's called DSCR, debt service coverage ratio. Okay, you just look at, let's say you buy a property, and even if it's vacant, or for flippers. Okay, I've seen a lot of flippers. Like, okay, you buy a property, and the market's changing, it's changed on you. And what you do is basically, hey, I'm going to dump this property. Okay, how about if you could cash flow on it? How about if you could hold it for some time?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Paul LeJoy, is a mortgage broker in California. You can find him online by searching Paul LeJoy on various platforms, including YouTube and LinkedIn. Paul, welcome to the show.
Thank you, Dan. Is it right?
It's great. Dylan, it's great to have you on here, Paul. And I'm a realtor licensed in Texas, and I've had so many guests from California on the show. One of the interesting things, I think, especially as a realtor, is people often go to realtors first, but where do we always direct people? To the lender, to the mortgage broker. So I always like to ask lenders and mortgage brokers on the show how they got into that side of the business. How'd you get into mortgage brokering?
Actually, yeah. So I got my real estate license in 2005. I came here in California as a tech guy. And so I started by having a real estate license. And because the commute was too much for me, one day I went home, and I was watching this infomercial by Carlton Sheets talking about how he's buying properties across the country, no money down, cash back at closing. So I was very intrigued by that, and so bought a set of CDs. And every time I was driving to the Bay Area, I was just listening to him. And so he also advised to get a real estate license. I got that in 2005. 2007, I got my broker's license. Fast forward 2010, 11, there were a lot of bank-owned properties. So I started buying bank-owned properties, a lot of them, and started flipping and stuff. 17. So a lot of people that bought properties from us, 11, 12, 13, they had a ton of equity. So I thought, man, I'm leaving a lot of money on the table. So why don't I go and get a license as a mortgage broker? So I got that license so that I can approach those people and say, do they want to refinance? If they bought properties from us for 200,000, now the properties are worth 600,000. They don't want to sell the properties, right? But they would like to refinance. That's how I got involved in the mortgage business of it. So I've done real estate sales, real estate investment, and then, of course, mortgage licensing.
As an investor, was there a specific segment of the real estate space that you were focused on? Single family, small multifamily? What were you looking at?
It was mostly single families, mostly single families. The in and out is just in and out. So that was it. I wasn't doing condos. Maybe of all the properties I've done, maybe one or two condos, townhouses. No, but it was single families.
Single family was focused. Okay. Going from being a real estate agent to then a broker, mortgage broker, did you see a clear path? Hey, I'm going to pivot my business, or did you still continue to be active as an agent?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I'm still active as an agent. I'm still active as a real estate agent and mortgage broker. And also one of the things is basically I'm able to do more things. Like, for example, let's say there's certain loan programs I didn't know about before. Let's say if I knew about those things back in 2013, 2011, 12, and 13, I wouldn't have sold everything. Okay, because I was always doing I was always doing hard money lending, buying properties using hard money. But I didn't know there were programs like DSCR, which is debt service coverage ratio. I didn't know that you could just use your bank statement to do a loan. I didn't know that you could just do your P&L, the profit and loss. So by knowing that, now you may be able to help real estate agents say, hey, listen, how can you close more transactions using unconventional ways? Okay, so if you know, you go like the streets, the strip mall, you can see all these people are business owners, but how do they buy houses? Okay, most small businesses, they will declare very little in tax, in income, including real estate agents. But how do you make sure they close transactions? Okay, of course, if they use the P&L, which is just profit and loss, or they use, if they're doing investment properties, they can just do a DSCR, which is debt service coverage ratio, putting down 15%. Put down 15%, you can get that transaction, you can get that deal closed. So they can do it for themselves or advise other people, the investors. Okay. So I remember doing one transaction and the guy was limited to 4. Okay. This guy worked at Amazon and his bank limited to 4 investment properties. They can only do 4 loans. But when you do DSCR, there is no limit to how many properties you can buy.
Right.
So long as the cash flow, right? So I think basically real estate agents can close more transactions if they know what I know now. And that's what I did not know before.
Yeah. And
Yeah.
when we talk about DSCR specifically, I think there's a lot of interest, not just from investors, like you mentioned, but from also the general public, right? Because you're now seeing it being used in the traditional space for folks to qualify where they might not have previously for a home for themselves, not just as an investment.
That's correct. So like I was saying, also bank statements. If somebody does bank statements, a real estate agent may be closing more transactions, and they can use your bank statements. Or like a broker, okay? When I was a big time real estate broker, okay, all the deposits are going to my account, right? But the agents are 90% commissions, commission splits. But of course, if I use my deposits, I could qualify for any property. Let's say I'm showing $2 million deposited into my business account, okay, of which the lender can expense 50% of that. That means they'll assume that I'm making $1 million. And so they can give me a loan based on the fact that I make $1 million. In a sense, I'm not making $1 million. I'm making way less than that, okay, because if I'm paying every agent, okay, 90%, that means I'm only getting
Right.
200,000. Out of that 200,000, I have other expenses. I have an office manager. I have blah, 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 But using these kinds of loans, of course, I can qualify so long as I'm able to make the payments, see? So many areas where real estate agents can therefore close more transactions if they knew about these loan programs.
One of the areas where I think this is not often mentioned is in the ability for individual retail buyers to qualify for like small multifamily. So you're looking at like duplex, triplex, quadplex. It may actually be easier to qualify for a DSCR loan for yourself, right? If I want to go buy a quadplex, in some cases the bank is going to favor that versus even a single family home.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yes, exactly. Because of course, it's better to have more units than have just one single family. Because if that's tenant's not paying you, then that's it. Now that's what they call the ratio, right? So the ratio is always one or better. That means basically your PITI must your rent must be equivalent 100% what your PITI or better. So we give you a loan based on the fact that your rent covers your PITI. Okay, so now in a single family residence situation, the tenant, especially in California, if the tenant doesn't pay you, and now you have to start evicting the tenant, that means now you have what? You have no income, and therefore you're going to be in default. As opposed to if you have 3 units or 4 units and one tenant doesn't pay, you got income coming from 3 other tenants. Yeah, and there are other ways that you can, even in California, circumvent some of those things like the rent control and all this eviction things, by maybe what I've seen some people do right now is instead of having a contract with, tenants directly or consumers directly, they have contracts with organizations, with agencies, right? So let's say an agency is catering to sober living, right? So that your tenants are not the sober people are trying to get sober. Your client is basically, or the person you have a contract with is that agency that takes care of those people. Okay, in many ways to skin a cat, right?
Yeah, I mean, when we talk about some of the ways where these loan products are benefiting multiple different segments, I think we're going to start to see, if it's not out there already, some of these other creative loan structures and loan types for other segments of the real estate space. I know right now there's a lot of action in 1 to 4, maybe even 1 to 8 or 10, but then beyond that amount for multifamily investors, they're either having to get a traditional bank loan or syndicate or raise capital in some other form. But I think we may start to see some other structures even for those larger assets as well.
But yeah, of course. So you do have commercial lenders that will cater to 8 plus, 10 plus units, just like you have residential lenders located to 1 to 4 units. And some of the residential lenders will not touch 5 units. Or some of them will go to 8 units, 10 units using a DSCR. But then you have commercial lenders, just like you have residential lenders, a whole boatload of them. I'm actually going to go into contract with one of them, what I mean? So basically where we can do the pricing, for commercial properties and bidding just like we do in the residential space.
Now, as a baseline, if someone was looking at the DSCR for themselves, and maybe this is their first investment property or first property for themselves, what are the baseline metrics that they need to have, reserves, credit, or experience in order to qualify?
Yeah. So basically, again, it just goes to what I call the expense ratio, or and that's why it's called DSCR, debt service coverage ratio. Okay, you just look at, let's say you buy a property, and even if it's vacant, or for flippers. Okay, I've seen a lot of flippers. Like, okay, you buy a property, and the market's changing on you. And what you do is basically, hey, I'm going to dump this property. Okay, how about if you could cash flow on it? How about if you could hold it for some time? The key thing is basically you look at, and the rates are going down. Interest rates are going down. So you just look at what is, and even if the property is vacant, we'll look at what is the market ratio. Okay, what's the market rent in that area? So based on the market rent, then I be able to qualify for that property, or only 15% down. So whether you are a seasoned investor or a newbie, right? The ratio is the same, 15%. Okay, because they're just looking at the income, the potential income, whether it's current or it's market rate. You're okay.
Right, right. And I do want to pivot a bit here, Paul, and ask you about looking at these deals through the lens of not just as a real estate agent, not just as a mortgage broker, but then also as an investor. So you now have worn three different hats, and they're three different arenas. But being able to have knowledge from each of them, I'm sure it affects the way that you look at deals and you underwrite deals. Right now, if you're looking at deals these days, is there a specific segment or grade of property that you're looking at? Are you looking at distressed property assets? Are you looking at turnkey? Are you looking at short term or long term rentals? Any specific asset class that you are preferential towards these days?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, my asset class is basically development. Okay, so because I think I have more control when I do development, and it's also it's a legacy. I call it Big Silicon Valley Dream Village Legacy. So what does that mean? Okay, so I've been in Silicon Valley for more than 20 years, and I've seen companies like Facebook, YouTube, Zoom, Airbnb, man, and you talk about Uber, all these ones, coming to being. NVIDIA, and it's like I'm sitting there doing what? I came as a tech guy, and it's like I need to leave my legacy too. And my legacy is basically what I know for the last 20 years, okay, is real estate. So I'm not saying how do you techify real estate? Because real estate is something that is going to be with us forever, right? Technologies will come and go. They'll change. Like now everybody talk about, this AI, many years ago, we've always had AI, but now it's like it's just gone to a different level, whole new level. And it's going to make a lot of people rich and all that kind of stuff. But you see, a few years back, people talk about Bitcoin and all that kind of stuff. Okay.
Yeah.
But real estate is something that is going to be with you forever. Okay. And even after you've gone, after people die and stuff like that, they're going to leave. So like the house I'm in right now, this subdivision was built in the 20s and 30s. 20s and 30s. It's a long time ago. The developer, who knows who the developer was? Okay. But the subdivision is still here. And we don't know what the technologies were back in the 20s and 30s. Okay. But real estate, the structure is still there. The subdivision is still there. And so my thing is, how do I then leave a legacy? My legacy would be, I'm not going to build like KB Hall, DR Hall, and Toll Brothers. I build clusters of homes not to exceed 30. And my key thing is that people in America, you live next to each other, but you don't really know each other. So now the way people are building is like you build this three-story, small, tiny stuff, going 3 stories. There is no backyard. There's no front yard. Okay, that's what they're building in Silicon Valley. So you live next to people, but you really don't have a community. So my thing is basically, I want to build communities of homes, okay, like villages where people live with one another and they know each other, like in a village, okay? So the example here is, and I created a really short AI movie about that. Okay, this woman leaves Africa, Cameroon, Africa, and she comes here, gets a master's degree in nursing. She gets a job at Kaiser in San Francisco, but she cannot afford to live in San Francisco. So what she does is she buys a house 45 minutes away from San Francisco, right? Now she finds love. Her husband, okay, works at Google in Mountain View. The commute is 1.5 hours. They have a first child, and they have a maternity leave, paternity leave for 6 months. What happens after 6 months? The baby is someone new. So they have to take care of this baby. So they take this baby to a daycare center, right, every morning. That means I have to get up very early, take the baby to a daycare center, stranger's place, and then go to work. And then they have to come back by 6 o'clock to pick up the child. I mean, that's a rat race. They're stuck in traffic for 1 hour, 1.5 hours going to work and going back. So I create clusters of homes. So what does she do? She goes back home, brings her mother. So the mother comes here, lives with them, but the mom has no friends. She loves, new life and blah, blah. She's happy. She has a grandkid. But when they're going to work, Monday to Friday, she's just there with a grandkid, no friends. So she's homesick. She wants to go back to Africa. How about if I build a village, okay, a cost of homes not to exceed 30, where you have multi-generations. So you have grandparents who are retired, and you have the toddlers. And the toddlers will keep the grandparents healthy because the toddlers will be running around, blah, blah, blah. So now you have a healthy multi-generational community, as opposed to where in America, your parents get that 70 years old, 75 years old, 80 years old, and now they become a burden, right? And so what do? You take them to old people's home. Everybody's old. Everybody's just looking forward to dying or something. No. How about build a multi-generational village community where you have the old, okay, people in their 70s, 80s, even 90s, and then you have the working class people are going to work, or people are going to work, working professionals, and you have the ones that are the grandkids, right? So now the working professionals don't have to rush to work. They don't have to wake up very early in the morning to wake up the child, to take the child to the daycare center, okay? And don't have to rush to come back home to pick up the child from daycare center because the grandparents are there. Even if your parents are dead, you have some other grandparents that are there who cater. It's a village. That is what I want to build in terms of investing. Okay, I've done a lot of flips, I've done a lot of that stuff, but that leaves me no legacy. There's no legacy. My legacy is based, my legacy product. Can I build these clusters of village communities, urban village communities, right? They're modern. Everything is great. It's actually more ultra modern, but also modern in the fact that they're wholesome, right?
Yeah.
And that is my passion in terms of investing.
I couldn't agree any more with what you're doing. And I live in Santo Domingo, capital Dominican Republic. And one of the things that I've noticed from living out here versus where I moved from, Dallas, Texas, and I grew up in northern New Jersey, right, 30 miles outside of New York City, is that we lose in some way this element of community, of connectivity, multi-generational housing, by being in the United States, that if you go outside of the United States, you may sacrifice some first world amenities, but there's, I would say, almost in some ways, superior community, superior ability for people to take care of each other in all the ways that you alluded to. So I think it's great what you're doing, Paul. We are coming up on time here, though. Where can our audience go? Where can folks go to learn more about the projects that you're working on? How can folks maybe reach out to you or your team?
Oh, good. So they can go to fat.homes. Okay, FAT, that's for my development and stuff. Fat.homes. Okay, they can go there and they'll see that movie clip I'm talking about. Yeah, that's my passion. And then from there, I mean, if people are watching this and they want to do a loan or something like that, I mean, yeah, my day-to-day thing, basically, they can go to our website too, and from there they can reach out to me. All right. My number is 415-510-0127. 415-510-0127. Yeah.
Paul, thank you so much for coming on the show today.
Well, thank you, Dylan. Thank you so much for having me.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.